What are some of the leading indicators of the longer-term outlook for the U.S. economy?
One of the best leading indicators of the economy is actually the stock market itself, with stock index futures trading higher in the last several months. That, I think, bodes well for the longer-term outlook for the U.S. economy. Of course, there is likely to be some weakness in the very near term. Also, the stock market tends to lead anywhere between a couple of months to as far out as a year or so. But in any event, stock index futures gaining as they have is an encouraging indicator for at least the long-term outlook for the U.S. economy.
Why is silver gaining on gold today, and what is the price outlook for gold and silver?
Well, the silver is actually gaining on the gold today, and I think because there is somewhat of a more encouraging outlook on the global economy, including the U.S. economy longer term, the industrial component of the silver market seems to be shining a bit more than the gold today. So we do have silver higher, gold a little bit lower. But the longer term outlook for both still appears to be encouraging, and the charts also seem to be supportive for both gold and silver.
What is the significance of the S&P 500 futures breaking out and above a double top on the weekly chart and above a quadruple top on the daily chart?
Also, we do have some breakouts to the upside in the stock index futures. The S&P on the weekly chart advanced to above a double top pattern. Also on the daily chart, a series of highs have been taken out yesterday and on today's trade with increasing volume. So with these double and triple tops or quadruple tops on the daily chart being broken to the upside, that suggests that there may be some follow-through gains, especially with the heavier volume.
Steve, what is the latest on global weather and its impact on 2020 world crops outlook?
As far as global weather is concerned, we're seeing good rains across the Midwest, and the 2-week forecast calls for warmer temps and possibly normal rainfall. So for the U.S. corn and soybean crop, it's a good start. The wheat crop has had some damage, early frost, some dryness, and now it's dry in the western part of the hard wet winter wheat area, so that crop might be a little bit lower than what the USDA said in May. Around in Europe, Western Europe is dry, while Eastern Europe and let's say the western half of Russia got some rains over the weekend. So June is really a critical month for crops there, and so we'll see if there's any issues there.
What is the managed fund positions and technical price signals? Should farmers sell demand or weather rallies?
Funds right now are short almost a record amount of corn. They're short wheat, they have a small long position in the beans, and they're even in soybean oil and short soybean meal. Technical considerations is that soybeans backed off from its 850 level on concern about China not buying U.S. soybeans under the Phase 1 deal. We have seen a little bit of a rally overnight based on higher financial markets, and China did come in and buy 266,000 tons of U.S. beans that was announced this morning. So the key there is in the beans is whether or not China's going to buy beans or not. In the corn, we're stuck in a $3, $3.40 trading range, right at the middle of that range. The drop in ethanol demand is going to increase the carryout, and we would assume that normal weather will increase the carryout for 2020, 2021. And so it's going to be hard for corn to rally unless there's some unexpected demand or if there's a weather problem later in the growing season. Should farmers sell this rally? I think yes, at the 850 area in July beans, 340 in July corn, and 530 in July wheat.
What is the latest on China buying U.S. ag goods under the Phase 1 trade deal?
So far, China has been a slow buyer of U.S. soybeans for new crop. And starting in June, the U.S. trade representatives will be able to start auditing how much China has bought versus the agreement. There has been some increased tension between U.S. and China, especially with the Hong Kong protests, but no new sanctions were put on China by the U.S. over the holiday weekend, so that might have been offer some positive news. Again, China has to buy a lot of U.S. ag goods, and in doing so, that would raise prices. But right now we're not sure if they're going to or not. There was a report out of China that they may only buy what they need, and they have bought a record amount from Brazil, so they may not buy according to the agreement of the Phase 1 trade deal.
The views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.